Tesla shares in focus today as CEO Elon Musk said that the stock price shows the company is in a good place. He said he's committed to still be Tesla's CEO in 5 years. For more on the latest from the EV maker, let's welcome in Jed Dorsheimer, William Blair Group Head of Energy and Sustainability Research Sector. Jed, it's good to see you here. Now, this seems to be, rather than a pivot point for Musk, this seems to be sort of the last point in his recent pivot, if that makes sense. In other words, he sort of has made a recommitment to the company. We've seen that on the earnings call. We've heard him talk about it. And then this latest comment just sort of seeming to solidify it. Is that how you see it? And is it a positive for Tesla?
I think it's always been solid. I don't think that Elon's commitment has wavered at all in terms, I think there's been media around that, but I think what it does, though, is it reinforces, if you look at the value of Tesla, I've said this, that if you look at Tesla and you say it's just an auto company, well, then it would be, significantly overvalued, right? It would be a short if you looked at it from that perspective. Tesla is a juggernaut of innovation. And at the heart and central to that has been Elon, is the steward of that ship. So what we got today was kind of that affirmation from Elon that he's not going anywhere. And I think as the company looks at morphing once again in terms of the product portfolio and the drivers to this business, I think that is critical to make sure that he is going to be the one at the helm.
And speaking of Tesla innovation, Jed, robotaxis on the way, right? I'm curious, as an analyst who knows this company very well, when you think about that broader robotaxi market, Jed, what it is, what it could be, how do you sort of compare and contrast Tesla and Waymo in that market?
It is a good question. Our focus on Tesla has been on the energy side of the business, which is 14% of sales, but 25% of the profitability. And I think we've been pretty right on that. The robotaxi has kind of been this moving target, for the past few years. And now we're really coming to the point of launching the beta in Austin, Texas. And, I think there are probably ways that Tesla can have an advantage in terms of that true vertical integration, which Waymo doesn't have. And the counterpoint between the two has been whether LiDAR versus camera. And I think at this point, from a scalability and a cost perspective. And so the ability, if Tesla can prove out robotaxi successfully with the visual versus the LiDAR system, that means that the profitability for Tesla is going to be far greater than what Waymo would be able to achieve. But that is a risk factor around both of them. And we have yet to see Tesla kind of prove that out in the real world. So this is going to be critical for the future of Tesla's business model.
And that's because the camera system is less expensive than the LiDAR system, Jed?
Oh, yeah. So I think the cost structure is, like 100 grand for a Waymo, compared to, so it's fractions. It would be pennies on the dollar in the comparison. So that gives a, major advantage to Tesla, as long as they can kind of prove out that the neural network has the efficacy and the safety associated with that.
Jed, let's say that EV tax credit, Jed, goes bye-bye. That $7,500 gets repealed. What does that mean for Tesla?
No, the stock would go lower, in my opinion. That will have a margin contraction, and so that is the other risk that's on the table as we go into, moving over to robotaxi. Because if you get rid of the tax credit, that's going to be a headwind on overall EV demand in the U.S., and that would hit the margin structure because autos still are the largest product on the business model. So if that is if you have high conviction that is going to go away, and that then there could be volatility in an air pocket before you get to we see the robotaxi ramp.
All right, good to know. Lots of stuff to watch when it comes to Tesla. Jed, thank you so much.
Thank you, guys.